I'm Catherine Ross, and I'm here live from the floor of the NYSE. Jim Cramer is off this morning, so joining me is Jeff Marks, Senior Portfolio Analyst at Action Alerts Plus. Jeff, Davos kicks off next week, and we're at all-time highs in the market. Do you think that Davos is going to have any market impact?
Well, I think one thing that you may want to look for, and I'm picking this up from something that Jim Cramer tweeted yesterday, is he expects Trump to be tough on our European trade partners. And I think that's a logical move considering the recent win that he just got with the Phase 1 trade deal with China and USMCA. So I think that's one expectation that investors can have, but at the same time, we're going to get earnings from a lot more companies. So we'll be seeing how they're doing and some more forecasts for 2020. So that's what I'm looking at for next week.
Speaking of all-time highs, Alphabet joined the $1 trillion club yesterday. It's the fourth U.S. company to do so. And I've got to ask, who's next?
Yeah, I think you want to be looking at Amazon. Amazon is, I think, slightly below $1 trillion. I mean, they're really the only one in that neighborhood that can get there. So while they're the logical answer, let's talk about what could get it there. So I think first you want to see continued gains related to the one-day Prime shipping. And they're obviously investing a lot in that right now, but as soon as they really turn that investment spigot off, they'll really ramp up profitability. So that's one way. Two, AWS, you want to see continued growth there. You want to see AWS fend off rising competition from Microsoft and Alphabet, which is really with the Google Cloud as the up-and-comer in the space. And you want to see advertising, which is another fast-growing, high-margin business of theirs. You want to see that really continue. So, if they kind of check off the three boxes there, we'll see $1 trillion.
Microsoft is our real money stock of the day. It also is a $1 trillion company, and it promised that it's going to be carbon negative by 2050. Did Microsoft just kick off the race to be carbon negative?
Well, that would be great. I mean, that is, it was quite the inspiring interview that Jim had yesterday with the CEO and CFO yesterday on Mad Money. What Microsoft is doing is incredible. Getting carbon negative, taking out all the, with the goal of, I think it was 2050.
To be completely done, or completely negative by 2050.
Yeah, negative, and not only that, it's take out everything that they've, that the country has produced carbon-wise since it was founding, and I think that's a tribute to Microsoft being a company that likes to go where the puck is moving. We saw that with the cloud, and it's great to see some of the biggest and brightest business leaders in this country be so forward-thinking and really kind of emphasize this ESG focus, because that's what we want to see. We want to see them lead by example. So it's no surprise that Microsoft, as a $1 trillion company, is making these important, monumental shifts like this.
Now read more on Microsoft over on our sister site, realmoney.com. Jeff, I want to talk about retail, specifically Gap, because it announced yesterday that it plans on not going through with the Old Navy spinoff. Now, one thing, we talked about Gap back in November when CEO Art Peck stepped down, and one thing that you noted was that millennials don't have any brand loyalty to Gap. So should investors have loyalty?
Yeah, that's a good question. I think obviously you want to have your customers, you want to have repeat shoppers, and I guess I personally don't shop at Gap, so it appears that the way the numbers work that I'm not the only one out there. But I think that to build a shareholder loyalty base, you kind of want to see three things, and I would say first ESG, which we kind of just spoke about with Microsoft. Obviously, that's kind of where everything's going with what we heard earlier this week from Larry Fink at BlackRock. So you want to see some focus on ESG. Two, you want earnings predictability. Investors don't like when earnings are volatile and when there's surprises. No one likes to be surprised to the downside with some random type of pre-announcement that really shakes everyone, that they just didn't see coming. So ESG, you want to see predictable earnings. And third, to build a loyal shareholder base, you want to see a management team focused on shareholder-friendly capital allocation strategies, whether it's like Brad Jacobs at XPO, who is trying to find ways to unlock value within the company, or just a consistent shareholder return policy, whether it be through the dividend or share repurchases. Now, I know Gap, its dividend is about 5% right now. I think that's more of a function of where the stock price has been going than the dividend increasing. So, but I think that's what you would look for, those three things: ESG, earnings predictability, and capital allocation that's shareholder friendly as three ways to build a loyal shareholder base.
I want to stick with the millennials, but I want to talk about Airbnb because in today's Deal Book briefing, which is a New York Times newsletter, the Airbnb CEO spoke to Andrew Ross Sorkin about what he's going to call stakeholder meetings, which are different than shareholder meetings for them. So that basically they're going to start bringing in hosts and customers of Airbnb and not just investors. And that's really interesting, especially when you put it in light of, Uber and Lyft, who also reach out to people who use the service but may not be invested in the company. And I'm wondering, is this just something that we're going to start seeing for the new age investor?
Yeah, I think you're right. I think it fits kind of the theme that we've been seeing all week, and with these management teams really wanting to focus on more than just profits. They want to make sure they're having a positive impact on the community, on the future, and everyone that's involved. So I think it makes sense. I think it could be a growing trend, especially as we see. Look, if you get an investor at a young age, and I would think a lot of it's more of like a younger thing. People doing Airbnb. If you can get them on now, they'll be hooked for the next for a long time. So I think that's kind of like the mission here, what they're trying to accomplish.
All right, Jeff, thanks for joining us this week.
Yeah,
It's been a lot of fun.
Thanks for having me on. It has been a lot of fun. Thank you for everyone who's been listening. I hope that there was at least one thing that you could take away from something that I've said. So I appreciate it. Thank you very much.
And it's not done just yet. We still have our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. I'm Catherine Ross, and we'll see you on Tuesday when Jim is back.